What's going on, everybody? Welcome to another Nomad Hedge market update video. We're going to go through the major indices, and I want to specifically point out that I think we will hit a bottom here for the major indices. We're going to take a look at the dollar as well. I'm a believer in Fibonacci. You know, the Fibonacci always tells me the destination of where the market ends up finding support eventually. All right, so we're going to take a look at the S&P 500 here, and we can see here that we have reached 100% extension, which is where you typically want to see wave C end. All right, so we're seeing this across the board. You know, we saw this candle here that was on Wednesday, and so we saw this shakeout here, and this is obviously interpreted as a bullish candle. And the same thing goes with the Nasdaq Composite Index, right? So here's the Nasdaq Composite Index ending right at the 100% extension, where you typically want to see wave C end. Okay, so now if we breach below the 100%, the next target is obviously 1.618, and if we go below 1.618, then you have to look at this as a very large impulse towards the downside. But for now, this looks like we have ended or completed wave C, so don't be surprised here to see the markets bounce out of these levels, especially when we're so oversold here on the daily chart. And you know, you can take a look at these short-term indicators. We're seeing some momentum here on the Impulse MACD to tick up. Things are looking a little bit more bullish here. Let's also take a look at the the NYSE, right? So this is the equivalent here. We have a WXY, where you typically also see this thing ending at the 100% extension, and we're seeing these candles here playing out across the board here. And it also sort of like aligns with this lower low trend line, and this is just a parallel from the trend line above. So we are actually oversold across the board. We're looking at the Dow Jones Transportation as well, ending right at this 100% extension. So we want to obviously hold above these levels and stay above these levels. That would just confirm that the market is trending up. If we breach below it, then we would have to look at the 1.618, and then if we zoom out here, we would then get a really strong breach below this higher low trend line. So that's for the Dow Jones Transportation. Now if we take a look at the Russell, what we can do here is let's just get rid of all the fib levels for now. Now if we draw an extension here, one could make the case as this is A and then B, C. So we ended right there at 1,761. okay, but if this is a larger impulse, you know, we're looking at 1, 2, and then 1, 2, 1, 2, 3, 4, 5. So we should expect to see wave 3 completing at 1,730. Okay, so that's the more bearish case here, which is a possibility. So that's just, you know, something to keep an eye on. Obviously, we're looking at the dollar index here. We breached above this 105.883, and so if we take a look at this thing on, you know, a monthly chart, wow, I mean, this is a huge breakout here from this falling wedge. You know, if we're going to break out here and continue the uptrend, then that's obviously not a bullish scenario for US stocks in general. So if we're getting a pullback here for the DXY, I'm suspecting the pullback to be rather just, you know, perhaps we're looking at levels at maybe retracing 50% all the way down to 0.618. I think this lower high trend line here could act as support, and that in that case then we would see equities, you know, start to rise from a falling dollar. Okay, another thing could be said here with the 10-year treasuries, and we're starting to find some resistance here right at that high trend line. So if that's the completion of wave 5, we should start to see the 10-year rolling over from these levels. So I've seen a lot of people talking about the TLT, and this could be a very good opportunity to buy TLT. Obviously, they will be right if the 10-year starts rising from these levels. Now, let's also take a look at the VIX. And the VIX here, if we zoom out and let's see here, this is a weekly chart. I've been eyeing this higher low trend line here, and look at the candle here, the weekly candle here. Let's see, let's go back to the daily. It was actually rejected right at that level. So if we're starting to see the dollar rolling over, the 10-year rolling over, the VIX, you know, finding resistance right at that level. Plus, you know, we have 3 open gaps here towards the downside. These are intraday, obviously. But then lastly, let's also take a look at the put call ratio here. So it's above, you know, once we're reaching 1.15, that's when you typically see a reversal in the major indices. And so this one currently stands at 1.4. Things are looking bullish here on a very short-term basis. If we're not taking off from here, this is probably just a reflexive rally. We're finding resistance right at that previous August high here of 2022, and then we can look forward to 1.618. So what I mean by a reflexive rally is that we're just working off some of these oversold conditions before the downtrend continues. Markets tend to be a little bit weak even in the first 1 or 2 weeks in October. Maybe we'll just get a Santa rally to start a new uptrend once these levels here, have been reached. So that was just a quick update here in the major indices, and just in case, if you are very bearish, you have to be able to be open-minded here and see that the market indices could actually start taking off from these levels. So I'm going to obviously keep you guys updated. You can follow me on Twitter or X. My handle is Nomad Hedge. That's across the board if you want to follow me on Instagram, Facebook, or X, but I keep my social media more frequently on X. So thank you so much for watching, and I'll see you guys in the next video. Take care for now.